You know, for decades, there's been this one guy whose memos are basically required reading for any serious investor. We're talking Wall Street pros, even Warren Buffett himself. That's Howard Marks. So in this explainer, we're going to unpack the core principles of his legendary philosophy straight from the source. This quote right here, this gets to the absolute heart of his central theme. Marx is convinced that since none of us can possibly know the future, the whole game of investing isn't about forecasting at all. It's about getting yourself ready for a whole range of possible outcomes. It's really all about humility and preparation. So, okay, if you can't predict, what exactly are you preparing for? Well, for Marx, the answer starts with understanding the real source of all that market craziness. And guess what? It's not the economy, it's not the companies, it's us. And here's the core idea. The biggest, most dramatic swings in the market, they aren't driven by fundamental changes. They're driven by massive shifts in human psychology. And that is where most investors make their biggest and most costly mistakes. As Marx himself puts it, this whole cycle of euphoria and despair is totally predictable. We get swept up in the emotion of the moment, right? We buy high when we feel invincible, and then we sell low when we're absolutely terrified. This pattern of error is the key to his entire strategy. So that brings us to his number one tool for navigating all this market psychology, thinking like a contrarian. And he has this fantastic analogy for how it works. Simple, right? But it's an incredibly powerful way to think about it. He doesn't see the market as something you should fight head on. No way. Instead, he sees it as an opponent whose own force can be used against it. Think about it. When the market is totally gripped by extreme optimism and it's pushing prices to just absurd highs, a contrarian doesn't fight it. They simply accommodate it by selling. And when the market is drowning in pessimism, well, they use that very same force to their advantage by buying. This breaks that whole jujitsu strategy down into 4 pretty clear actions. It's all about leaning away from the direction the crowd is running. Because as Mark says, you're going to find very few bargains among the investments that everybody loves, feels comfortable with, and is desperate to own. Now, you can only pull off this contrarian mindset if you have a rock-solid grasp on what you're trying to do. And for Marx, the most important thing, the absolute foundation of everything, is understanding risk. This is such a crucial distinction. You know, the financial world so often defines risk as volatility, how much a price bounces around. But Marx, he just dismisses that. To him, real risk is much simpler and way more serious. It's the chance that you will lose your money for good. This quote just perfectly captures what happens when you redefine risk that way. See, superior investing isn't about trying to maximize your returns. It's about minimizing the chance of a catastrophic loss. The goal is defense first. If you focus on avoiding the big mistakes, the successful investments tend to take care of themselves. Okay, so how do you actually avoid those big mistakes? It comes down to understanding the critical difference between what something costs you in the market and what it's actually worth. Marx loves using this famous quote from Benjamin Graham to explain the market's kind of split personality. In the short term, prices are just a popularity contest. That's the voting machine. But over time, an asset's true, fundamental worth, its weight, is what really matters. Let's just break this down. Price is what you pay. It's emotional and it fluctuates wildly based on the crowd's mood. Value is what you get. It's based on fundamentals like earning power, and it changes much, much more slowly. A great investor learns how to live in that gap between the two. So what this means is that all the daily noise, the endless ticker tape of ups and downs, it's almost entirely about shifts in emotion. The underlying reality of a business rarely changes that fast, and recognizing this is the key to resisting that emotional pull of the herd. Okay, so let's pull all of these threads together into a clear set of guiding principles. You might call it an investor's creed for dealing with a world that's anything but certain. This is basically the cheat sheet. It's about humility, worrying about what can go wrong. It's about defense, building in a margin of safety. And it's all about psychology, resisting your own emotions and respecting that markets move in cycles, even if we can't time them perfectly. And really, at the end of the day, this is the goal. By understanding psychology, risk, and the difference between price and value, you position yourself to be on the right side of the errors that the emotional market will inevitably make. And we'll just end on this really provocative question from Marx. His philosophy is one of caution, of defense, of consistency. It may not always be the most exciting path, that's for sure, but it's built for survival and long-term success. And it leaves you with a final thought. Are you aiming for the home run, or are you just trying to stay in the game?